your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. SoftBank Group's ARM Holdings Limited is planning to raise as much as $4.87 billion in a significantly smaller IPO than the phone chip designer had previously targeted. ARM will now offer 95.5 million American depository shares for between $47 and $51 each. That, according to a filing with the SEC, the deal will value ARM at as much as about $54.5 billion at the top end of the range, according to Bloomberg News calculations. Underwriters have the option of buying as many as 7 million additional shares. And with more, here's Bloomberg's Ed Ludlow.
Even at the bottom end of that range, if they price at 40.
Underwriters have the option of buying as many as 7 million additional shares. And with more, here's Bloomberg's Ed Ludlow.
Even at the bottom end of that range, if they price at $47 a share, it would still make this the biggest IPO globally of the year, surpassing Johnson & Johnson's consumer health spin-off of Kenvue. You'll remember that came in raising $4.37 billion. A lot of interest here, partly because we see it as a kind of starting gun for the IPO window for technology companies. There are a number waiting in the wings.
Indeed, online grocery delivery firm Instacart and footwear maker Birkenstock are among those that have either already filed for or are pursuing IPOs. Mining company BHP Group says artificial intelligence and machine learning will help explain a pickup in production at Chile's Escondida copper mine, the world's largest, as the industry battles deteriorating ore quality at its aging operations in the South American nation. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Thanks for joining us live from Washington. We'll hand the baton back to New York in just a couple of moments here with Bloomberg Business Week on the way next. Don't forget to subscribe to the podcast and find us on our YouTube simulcast. We'll meet you back here tomorrow with the cameras turned on. Just search Bloomberg Global News and you'll find us. I'm keeping you up to date with things now as well. World and national news with Nancy Lyons in the Bloomberg 99.1 newsroom here in Washington. Hi, Nancy.
Thanks, Joe. The former leader of the far-right Proud Boys is being sentenced this afternoon for his role in planning the January 6th assault on the U.S. Capitol. Prosecutors are asking for the longest prison sentence yet for Enrico Tarrio, more than 3 decades behind bars. They claim he was trying to trigger a new American revolution, but his attorneys are arguing he was not even there that day. Former Trump White House Chief of Staff Mark Meadows has pleaded not guilty to charges in the election interference case in Georgia. Meadows and 5 other co-defendants waived their rights to formal arraignments and pleaded not guilty today. They face racketeering charges for allegedly trying to overturn the state's 2020 election results. Well, the White House is preparing for President Biden's planned trip to the G20 summit in India this week and keeping an eye on another planned summit next week between Russia and North Korea. We get more from Bloomberg's Irv Chapman.
With the Ukraine war as a backdrop, National Security Advisor Jake Sullivan was asked about North Korean leader Kim Jong-un's announced plan to confer with Vladimir Putin.
We have not seen them actively supply large amounts of munitions or other military capacity to Russia for the war in Ukraine. We have continued to squeeze Russia's defense industrial base, and they are now going about looking to whatever source they can find.
At the meeting, Sullivan said the president will focus on helping developing economies with more World Bank money and debt reduction. In Washington, Irv Chapman, Bloomberg Radio.
Senate Minority Leader Mitch McConnell's office is trying to reassure the public after his latest health scare. The 81-year-old lawmaker's office released the results of a recent exam with a Capitol Hill attending physician. It states McConnell does not have a seizure disorder and did not suffer a stroke. The doctor added that there's also no evidence of a movement disorder like Parkinson's disease. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe.
Nancy, we thank you. Something important is going to happen in just about a half an hour from now at the White House. We've just spent the better part of 2 hours talking about a lot of bad things that are about to happen in Washington, including the possibility of a government shutdown. I guess not everyone thinks that's a bad thing, but just the strife, the debate, the very painful conversations that are going to follow on supplemental budget requests, the war in Ukraine, Pentagon policy, the blockade of military promotions. I could keep going. But as I said, in about 30 minutes in the East Room of the White House, something important is going to happen. President Biden today will be awarding the Medal of Honor to Army Captain Larry Taylor for conspicuous gallantry in the war in Vietnam. This brings us back to June 18th, 1968, in a remarkable story from Captain Taylor, who was a helicopter pilot in Vietnam. He flew an AH-1 Cobra. This is back in 1967 and 68. As he was on duty, of course, in this case, 55 years ago on June 18th in Ap Kog Kong, according to details released by the White House, and they put out the whole story last week. He was leading a helicopter light fire team deployed in support of a reconnaissance patrol that had been surrounded. They were under fire, and they were going to bring in a big Huey, a UH-1 Huey helicopter to get his brothers in arms out alive, but it was canceled because it stood no chance of success. Running low on fuel, as the story goes, with the patrol team nearly out of ammo, Taylor decided to pull the team out using his two-man Cobra helicopter. Had never been accomplished. By having them hold on to the helicopter's rocket pads and skids, he carried them to safety without injury. Think about Captain Taylor today when they tell you nothing good happened in Washington. I'll meet you back here tomorrow on Sound On. I'm Joe Matthew. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Hello, hello. Good afternoon, everyone. Live from the Bloomberg Interactive Brokers studio. We're streaming on YouTube. We're also on Bloomberg Originals. It's Tuesday, September 5th, 2023. I'm Tim Stenevec, along with my co-host, Bloomberg News Deputy Team Leader of U.S. Equities, Jess Menton. Carol Masser is on a vacation. Jess, good to have you with us this afternoon.
Oh, it's always a blast being here. I have to say, though, for this Tuesday, it still feels like a summer Friday.
I was
even though people are acting like summer's over.
I was going to say it feels like a Monday.
Right? It definitely does.
Yeah, this feels like a total Monday. Well, goodbye, summer. You know, I got a text message from some friends this morning, like on this group chat, and they were like, well, there it is. Goodbye, summer. That's it. I said, you know, it's 100 degrees out. It's not.
Right, and technically, isn't it until a couple more weeks till officially solstice, all that good stuff? So I'm living as if it's still summer.
I completely agree with you. Well, kind of a mixed bag for U.S. equities today. The Dow, the S&P are lower, though the NASDAQ is higher right now. We do see Treasury yields climbing. Traders making a bet that interest rates are going to remain elevated, even if the Fed decides to go on hold. And then, Jess, there's oil, that rally in Brent oil to $90 a barrel, actually going past it, adding to concern about a flare-up when it comes to inflation.
Right, and we do have a ton of stories to get through, as well as some great guests over the next few hours. And first off, we'll eventually have the $1.3 trillion problem few have figured out, and the hint, it's actually global.
Yeah, this is a good one. I look forward to it. It's today's big take. Also, what's going on in China? Bloomberg Economics actually cut its long-term forecast. This is the post-COVID rebound has run out of steam.
And also, we're taking a close look later on in this segment as far as how cybersecurity and when it comes to those issues, what AI means for that and why it still could pose a hurdle on this.
And in the magazine this afternoon, we're going to be talking about New York City's cash bail reform success. It's actually taken on a $2 billion industry, but there are a host of challenges that come along with it as well.
Right, so we definitely have a lot coming up. And then finally, obviously, looking at what's happening in one of my favorite stories that you pointed out, Tim, when it comes to work at home and also women and what that means for the workplace.
Yeah, we kind of got this work theme happening post-Labor Day in today's program. So we got a great 3 hours coming up. We're also going to be speaking with Richard Edelman, the CEO at Edelman, all about the Trust at Work report, sticking to that work theme. All of this to come. We're seeing a mixed bag for the Dow, down 0.3%, the S&P down 0.2%, the NASDAQ up 0.1%. Let's, though, bring in our TV colleagues. Bloomberg's Countdown to the Close starts right now.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostick here alongside Katie Greifeld. We're joined right now by our colleagues, Tim Stenovic and Jess Minton. Jess filling in today for Carol Masser. Welcome to our audiences across all of our Bloomberg properties here on a Tuesday afternoon where we're looking at a market pretty much across the board in the red, though we should point out the NASDAQ indices now poking into the green on what coming off a holiday weekend, Tim, where I think everybody's supposed to be back in the office.
I was going to say everybody's supposed to be back. She's on vacation. She didn't take much vacation this summer, so she always likes to take a little bit
she only
in
works
August.
3 days a week.
Wait, did I say August? In September? When?
It is September.
Is it September already?
Yeah.
Okay, well, here in the U.S., it is post-Labor Day, and of course, it's kind of this reset. The kids are back in school, unless you live in New York and the kids are not back in school yet. But nowadays, Labor Day has kind of turned into this moment where each year companies are saying, okay, well, we're doing this reset. You need to be into the office X number of days per week, starting Labor Day. Indeed, we're seeing that with Amazon. We're seeing that with Zoom. It's not just a U.S. phenomenon, though. This is happening around the world. And today's Big Take takes a good look at, Jess, the economic impact of what could happen if things don't recover to pre-pandemic levels with people actually going back to work.
And clearly the stakes are pretty big here when you see the dollar figure at $1.3 trillion of real estate value in big cities potentially being erased by 2030. So eye-popping number there, but also just looking at what happens when the dynamic when you're looking at what's happening with workers in Asia and Europe coming back to work in office more quickly than some of its counterparts, obviously over here in the U.S., Tim.
Yeah, I thought it was interesting, too, looking at some of the country data. I mean, what country has the most work from home? Do you know?
The most working from home?
Yeah, in terms of hours work from home.
Isn't that us?
No, I thought
Is it
so
Australia?
Too.
It's Australia?
Canada, believe it or not.
Canada. Okay.
And then number 2, I think, was the UK. And then
Wow.
I think the US finally comes in number 3.
That's really interesting because, I mean, maybe
Once
this
again,
is...
we're losing out to the British Empire.
We're just losing
It's been
here.
happening for quite a while.
Yeah.
I was going to say maybe it's the echo chamber and the fact that I live in the U.S., but I feel like we talk about it much more over here.
Maybe if they kept track of the minutes we talk about it, then we'd be in the lead.
You know, it's the fewest, at least among the big developed nations.
Taiwan?
South Korea.
Oh.
Yeah.
Wow.
I keep just getting it wrong, Romaine.
Yeah.
God,
Well,
well,
it's only Tuesday.
There's plenty of days to continue to get it wrong later this week.
let's see if we have any quizzes coming up in this next story, because the story that we've been following about with the IPO market, of course, is that ARM roadshow. There's another great story out by our deals team saying that SoftBank's ARM Holdings is planning to raise as much as $5.87 billion. That is significantly smaller, Romaine, than some of those previous targets, if you will.
Yeah, I'm curious too. I mean, there's been a lot of talk as to why the valuation is coming in lower. Some will say that, well, you're talking about a company that doesn't quite have the same AI pedigree that you would get out of, say, an NVIDIA. But at the same time, there's a lot of talk about what the ownership structure of this company is going to look like, with SoftBank actually retaining a much larger stake than I think what people had thought.
And also still even at the lower end of this range, it still would be the world's biggest IPO at this point, even surpassing what we saw last month when it comes to Kenvue too. So even though we did see some moves there, still pretty big there.
And just to the point about its size, I mean, again, there's 2 interesting stories here, like Romaine touched on. You have the ownership structure and then just the sheer size of this. So it's really important for SoftBank, and it's really important for the sentiment of this IPO market.
You know what's really important for?
Tell me.
The investment bankers, Katie. There are fees at stake
True.
here.
I
Don't
know.
forget them and the lawyers.
There's a lot of
They
heavy
are-
hitters attached here.
They're
I
the
thought you were-
drivers of this economy.
Romaine, I thought you were going to say it's really big for Birkenstock.
Yeah.
Birkenstock.
Because
They
that's
gonna
one
go
of the
public too?
companies. That's one of the companies on the sidelines right now, and
Yeah, shoes.
it could be going
Sandals.
public very
Yeah.
soon.
I saw Reddit was actually going to go public as well and
I
Discord.
am so
What's happening?
interested to see how that goes.
Well, that's why we're watching.
Is that a $55 billion valuation as well?
You never know.
That's why we're watching this one so closely.
Yeah.
If it does
Okay.
well, if the roadshow goes well, then
Yeah.
maybe we could be talking about a lot of IPOs.
In all seriousness,
on
though,
the end
this
of the
does
year.
get to the broader issue about market sentiment, though, Tim.
Yeah.
Yeah.
Okay.
All
Okay.
right.
Okay.
Yeah.
Hey, you
Yeah,
guys,
no
we're going to be
comment.
back with you in just a bit, so don't go too far. That is going to
We'll
do it
try.
now. We're back on live TV, radio, and YouTube, and of course on Bloomberg Originals at 4 p.m. for our Beyond the Bell coverage. We're going to take you through today's
Apparently a reset, kids are back in school, unless, of course, you are living in and New York City. But we want to continue with this story here when we're talking about China being the world's second largest economy, and also when you're looking at Bloomberg economics, really thinking that when you're looking at the trajectory of its growth, not quite holding up as much as obviously economists were anticipating. And then also when you're thinking about, Tim, the liquidity crunch it's going under, when you're thinking about some of those property developers and the pressure that they have been under so significantly, what this could really mean when you're looking at global economic growth. And then obviously the U.S. economy, which has proven to be pretty resilient here.
Yeah, just doing a great job of laying out all the challenges when we do look at China, the world's second largest economy. To get an idea where China's economy is headed and its effect on global growth, we're very pleased to have with us this afternoon Leland Miller, CEO at China Beige Book International. Leland joining us on Zoom from Washington, D.C. Leland, how are you?
Doing well, thank you.
Well, thanks so much for joining us. You might have heard us mention earlier this morning that we actually saw Bloomberg Economics cut its long-term forecast as the post-COVID rebound has run out of steam. This for China. It's pretty remarkable to see this. And just a couple weeks ago, Carol and I were talking to some folks who said, you know what, it's no longer a growth story the same way that it has been in China for years. And in fact, we could see higher growth here in the U.S. That's just not something we talked about a few years ago. Where do you fall, Leland?
Well, it was something we were talking about for the past 10 years, but, nobody really wanted to hear about it because, the idea was China was growing at 8% or they were growing at close to 8%. And most people didn't really see a reason why the economic magic couldn't continue. The growth model had worked up to that point. Why couldn't they still crank out another 20 years at 8%? So I think that was the mindset up until relatively recently when people realized that, look, no one in Beijing is an economic magician any more than anywhere else in the world. They're subject to the laws of economics, and when they have the system that they have, it has structurally pumped up growth for a while, but there's going to be a much more precipitous slowdown on the way down. So I think, first of all, we have to be ready for a future of significant slowdown going forward, a structural slowdown. And second, when you're looking at whether the United States can pass whether China can pass the United States or whether it does or not, I think that the issue here is that if Xi Jinping falls victim to the mindset that he has to pass the United States and they do everything that's needed in order to pass the United States in GDP growth, then China will be going the wrong direction. I think Xi Jinping will be reversing some of the stuff he's been doing for the past several years. It's caused a lot of, pressure on the economy, but has been towards the idea of getting debt under control. So to the extent that China passes the United States, which looks unlikely, it's always looked unlikely, but if it does happen, it means Xi Jinping is doing the wrong things, not the right things.
Why is it that the post-COVID rebound just didn't hold?
That's a great question. I mean, we were very cautious, particularly early in the year, saying, look, there's a lot that China has to get over. You have to break down the COVID zero administrative state. Businesses have been frozen in place for a year now. But even we were surprised at how tepid the recovery was in the second quarter. I think it all comes down to confidence. When you look at what's happening in the economy, firms didn't like what they were coming out of. They didn't know what was happening. And so there wasn't a sense of confidence in the economy. If you don't have confidence, then you're not borrowing, you're not hiring, you're not spending. There was some of this, but not enough of it. And so you had a sequential recovery in month to month throughout 2023, but it was nowhere near what people were expecting or hoping for. And so people have become very, very despondent on what they're seeing in the economy right now.
So, Leland, what does this all mean for American investors and American companies that do business or want to do business in China?
Well, I think this is, piece by piece, we have been opening the eyes of foreign investors. I mean, a long time ago, it was geopolitics, and then it was the trade war, and then it was, COVID, and then it was COVID zero, and now it's, low growth after COVID zero, and with the foreign crackdown on foreign businesses. So there hasn't been one thing that convinced foreign investors, foreign businesses that they had to be more careful about going into China. Maybe they didn't want to go there. Maybe they had to pull their supply chains out. It's been incremental. But I think when we got to COVID zero, finally, I think a lot of foreign businesses, they just said enough is enough. We can't operate here. It's not worth it. And, we can't be susceptible to having our supply chains severed because somebody decides to do a nationwide lockdown.
But if you're Nike, if you're Disney, you're not going to throw in the towel. If you're Apple, yeah, sure, you're going to move your supply chains a little bit. I mean, but that company is just so intertwined with China.
That's exactly right. So what you're going to do is you're going to bifurcate your operations. So you're going to have a China operations, you're going to have an ex-China operations. That allows you not to have supply chains that are tangled up. You produce in China for Chinese consumers. If you think that's a great market, then you stay in there and you ramp it up. But if you're mostly ramping up for foreign consumers, maybe you don't run your supply chains through China anymore. So yes, absolutely. There's companies that don't want to have that absolutely don't want to pull themselves out of China and won't. But I think they're changing their approach in how they treat the China part of the equation.
How concerned are you about China's property debt crisis?
I'll be real provocative here, and I'll say I'm not concerned at all. Not that things aren't a mess. Look, we spent all of August, everyone's supposed to be on vacation. We spent all of August listening to people say that China's collapsing, the imminent hard landing. We had a lot of people worried about that, had a lot of notes going out saying, look, China's not collapsing. Here's what's actually happening. It's not that the property sector isn't a mess. The property sector is a mess. You've got a big shadow bank that's wobbling right now in Country Garden, which you had 2 years ago in Evergrande. It freaked everybody out. A lot of problems with the property sector. But China is not a typical economic system. It is a non-commercial financial system, which means they're much less susceptible to things like a Lehman moment, like an acute crisis. So you have the ability to do things in a non-commercial financial system that you can't do in the West, you can't do in the US, can't do in Europe. And so the idea that this is going to create some sort of sense of financial contagion and just roll everybody over, very, very unlikely. But it does cause stresses to the system, and I think that it's happening right now because the Chinese government is allowing it to happen. When it starts looking like it's going to go out of control, then they step in and they ease conditions a bit.
What are they going to do in terms of stepping in? I mean, are you talking a question of moral hazard here? Like they're not going to let anything fail?
Well, I think they know that they are creating very, very difficult conditions inside the property sector. What they want to keep the problems inside of property. So you want to make sure that financial contagion isn't spreading to other areas of the economy. You want to make sure that cash flow doesn't completely freeze up. And so that's why you're seeing easing measures right now. So, I mean, we have a fiscal activity index we track, a monetary stimulus index we track, and we could see that as they are pushing harder on some of these issues, like the resolution on these shadow banks, and as property continues to deteriorate, then they step in and they give it a little bit of juice on the side. And so there is a push and pull on these things. But in terms of a bank, a big shadow bank falling and it causing the system to fall apart in a domino effect like we saw with Lehman, that's not going to happen in China.
So what other corners within the economy have been able to offset those concerns when you're looking at what's happening with the property debt crisis not being as big of an issue as maybe people are thinking at this point?
Well, one of the problems is you haven't had real strength anywhere else to compensate. So if the conversation right now is, are things going great or are they going not that great, then it's a difficult, it's a difficult thing to hash out. But, luckily for us, it's been very easy because the question is China growing or is China collapsing? And China's clearly not collapsing. I think the whole thing is ludicrous that is the sentiment people have right now. If you look at what's happening in the manufacturing sector, it's actually held up much more impressively this year than we thought it would. You've got enormous headwinds. You're coming off 3 years of gangbusters growth. Manufacturing's holding its own. Is it doing great? Is it doing 2022 level? No, it's not doing. It's not what it was, but it's doing okay. It's not a huge weak point. The consumption parts of the economy, we look retail and services. Are they doing great? Well, parts of services are, but overall, doing okay. Very uneven. So they're not a real bright spot. It's just, you're not seeing great stuff out of China. You're not seeing good data, but you're just not seeing anywhere near as negative a story as a lot of people think is happening inside the walls of the economy.
Well, hey, just before we let you go, Leland, talk about political implications here. She is president for life, as you said in the past. Any political implications in 30 seconds?
This is Xi's show. So we can, we spent a lot of time talking about how, foreign investors say, oh, Xi Jinping would never do this because ... I think after a year of COVID-0, we should be coming to the conclusion that there is nothing Xi Jinping won't do simply because we don't think he'll do it. He'll be very humble in evaluating where he's taking the economy, and it's in a very different direction than he ran in the past.
All right, we're going to have to leave it there. Thank you so much for taking the time this afternoon. That's Leland Miller, CEO at China Beige Book International, joining us this afternoon on Zoom from Washington, D.C. We have seen the NASDAQ turn lower, just down fractionally right now. The Dow down 0.4%. The S&P 500 down 0.3%. We're just getting started. Jess Metten and Tim Stenivek right here on Bloomberg Business Week.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long at Bloomberg. Losses for the Dow and the S&P. NASDAQ, the NASDAQ 100 index are both advancing. Treasuries fell amid a flurry of investment-grade bond sales. The dollar hit the highest since March. Stocks saw small losses. Right now, we have got the S&P down 12 points, a drop there of just about 0.3%. Dow Industrials down 135 points, down by about 0.4%. NASDAQ, the composite index, up 5. That is a gain of less than 0.1%. 10-year yield, 4.26%, with a 2-year that's now yielding 4.95%. Spot gold down $16 the ounce to $19.26. And West Texas Intermediate crude up 1.2%. 86.58 a barrel. Brent was trading above $90 a barrel for much of the day. 89.91 right now for a barrel of Brent, down by 1%. Inflationary pressures are an ongoing source of concern for investors between rising commodity prices, most notably crude oil, as well as auto industry labor negotiations. Subhadra Rajappa is head of U.S. rate strategy at Societe Generale, and she was interviewed this morning on Bloomberg Markets.
We know that wages have been high and sticky. We haven't really seen a precipitous rise in wages. But broadly speaking, a combination of both higher oil prices as well as pressure on the labor markets, a very tight labor force, is going to continue to put some pressure on inflation. Yep. So that's kind of where we're trying to gauge how much of an impact this is all going to have on the rates markets.
And you can hear more of the conversation with Subhadra Rajappa on the Bloomberg Markets podcast. You can download it wherever you get your podcasts. Oil trading higher, so are oil stocks. ExxonMobil up now by 0.3%. BP up 0.8%. Chevron up 1.3%. EOG Resources up 1.9%. Pioneer Natural up 1.3%. Again, recapping, stocks are mixed. The Dow, the S&P, they're both lower, and NASDAQ up by 3 points. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, Charlie Pellet, thank you so much for that update. Really do appreciate it. Well, Jess, as you and I have been talking about, here's Tuesday. Kind of feels like a Monday. Kind of still feels like summer, even though the day after Labor Day is supposed to be like a reset. Kids are supposed to be back in school. Nowadays, though, Labor Day has kind of emerged as this mark of a renewed push towards stricter office attendance policies. I remember that began back in 2020 and increased in 2021. And it continues today in 2023. You got companies like Amazon.com, Zoom, which was the darling of the pandemic. They're actually cracking down on getting workers back to offices for at least part of the week. But what's happening here in the U.S. is just part of the story. As Matt Boyle, senior management and workplace reporter, writes in today's Big Take, it's hard to cast entire continents as monolithic. That is, Asian workers are coming back, European nations are adopting new policies, and U.S. employers are fending for themselves. We've got Matt with us right now. Once again, it is Bloomberg, the Bloomberg Big Take. Matt's with us in the Bloomberg Interactive Brokers studio right now. So, Matt, I got to be honest with you. I've totally been thinking about this from the U.S. perspective.
Yeah, we all along. That's the problem. None of us are stepping back. We see headlines, Google says this, Elon Musk says that. What's Goldman Sachs up to? Oh, they've gone to 5 days. And we all sort of freak out about every individual. I'm not to say those companies are not big, influential, blue chip employers, but they're only a very small part of the picture. So what we wanted to do with this story is step back. What's going on in London versus Lisbon? What's going on in Munich, versus Mumbai, for example? Find the data. And the good thing, now that we're 3.5 years into the pandemic, we finally have some data coming out, some pretty reliable data on, what are the different office attendance rates? And then you got to dig deeper, though, and figure out, okay, what's behind that? What is shifting that, shaping that? Is it the way the city is laid out? Is it how long the commute is? Is it corporate culture in that particular part of the world? And that's when it gets really interesting.
What do you think were the main catalysts when you're looking at some of the counterparts in Europe as well as Asia being able to return to the office faster than us over here?
Well, just to start with Europe, one thing you're not seeing here in the U.S. is policymakers are playing a huge role. In at least a half dozen European countries, you have either remote work laws or what's called right to disconnect laws, where managers are not allowed to contact certain types of workers after normal business hours. Ireland has a remote work law. The Netherlands has got one coming in as soon as the Dutch Senate passes it any day now. And then, then you've got to have a little counterpart between the employers, who are probably not too thrilled about the government coming in and saying you have to give your workers the right to lobby and make a proposal to say I should be able to work remotely. I mean, could you imagine that in New York?
Right.
Imagine that in Texas?
No, I'm from Texas, and I definitely can't imagine that.
Yeah. No, I mean, Matt, you write about in Europe, not just the right to disconnect laws, but Unilever, for example, doing a 4-day work week. I mean, that's something that's completely foreign to us Americans.
Yes, although they were doing it not in Europe, but in New Zealand and Australia. And those are two of the countries where you see some of the highest rates of remote work. In some of the more English-speaking countries, you do see more. So it makes sense for them to try it there. Are they going to bring it to the Netherlands and the UK? We'll see.
Okay, you've got some just absolutely great data in this story. You point to a McKinsey study that said by the year 2030, we could actually see $1.3 trillion of real estate value in big cities around the world erased as a result of differing remote work policies. That's bad. We know that's bad. What do policymakers say about that, and what are companies doing to try to?
Well, there's
prevent that
what
from happening?
landlords are saying about it first. Yes,
Yeah.
that is bad if you are a landlord, or if you're a landlord with Class B and Class C real estate. You know, the Class A stuff seems to be doing okay. But again, what's really struck me was that how differently that's playing out in New York and San Francisco. A much deeper impact because you have downtown business districts, let's say right here in Manhattan, where you don't have as many people living and working and playing as you do in, let's say, a European city, which are much more intermixed. So you have less of an impact on workers. You have more of an impact on real estate landlords in some of these cities like New York.
But I wonder if there's a shift happening here, like if the pie doesn't necessarily change sizes, but if different slices get bigger. And I can give you my anecdotal example, Matt, that I've talked about. I mean, people listening to this have been tired of hearing this, but when I was on parental leave earlier this summer, I noticed that restaurants in my neighborhood of Brooklyn were like as crowded as they were on weekends because remote workers were actually now going to them during the day. And I just thought about the way that spending has shifted.
That's why Sweet Green is opening in the suburbs. That's why Pret a Manger is opening outside of city centers in the UK. I mean, businesses are not dumb. They're going to go where the customers are, certainly. So yes, if you're living in Brooklyn or up by me in Westchester, in my town in Westchester, sleepy suburban town, now has a flex work center right next to the train station. So I'm going to try it out and just like hang out in the Flex Work Center.
You got to do it for work, man.
In the middle of Westchester. I mean, why not? Would this have happened in 2019? Of course not. So yes, the pie is being redistributed, but if you're not moving with the times and realizing that the way we work is different now, and that work is no longer a place we go, it is a thing we do. Some people are going to get some very hard lessons here.
So when you're speaking with your sources, because this is Bloomberg, obviously we're going to talk about what this means for the economy. How does that offset when you're talking about consumers and spending versus obviously the issues we continue to talk about when it comes to real estate and trying to get people back into offices?
Well, I mean, what struck me as a former retail reporter was that some of these changes really echo, what we used to call the retail apocalypse.
Right.
When all the malls were dying, what we're going to do about malls? Well, maybe repurpose them, people. And you had started to see that, certainly. And I know you cannot convert every single office building into condos. We know how hard that is. Right. But could they be converted into other uses? Certainly. I think we do very well here at Bloomberg as we follow the money. And right now the money and the spending, as Tim said, is sometimes being spent in more residential neighborhoods. So is that where you should be opening up if you're selling sandwiches and salads? Probably.
Okay, let's talk about the most important thing for employers, productivity, because every few weeks we get this new study, and you cite a couple of them. Remote workers are more productive in some countries. Remote workers are less productive when doing other tasks in other countries. Holistically, taken together, what does the data tell us?
It's tough because productivity is vastly misunderstood, and everybody loves to take their favorite bit of research that supports whatever their conclusion is and wave it around, and say, "Yes, I was right. I was right." There were studies on remote work even before the pandemic. One of the most famous one was about Chinese call center workers who, when they went remote, were just as productive, if not more, and happier, more satisfied. That's what we often fail to realize with a lot of these studies, Tim, is that regardless of where productivity goes, and productivity is often in the eye of the beholder. Is it how many emails did you send out today? And if so, why are you measuring productivity by how many emails you sent out, or how many hours were you in the office? Remember the workaholics of the 90s who were the last guy to leave the office? Where are they now? Maybe some of them are CEOs, but do they regret being the last guy in the office every day? Were they the most productive though? Probably not. Were they the most satisfied? Probably not. So I think we need to take a little bit more holistic view of productivity and realize that you have to look at employee engagement. You have to look at whether your employees are being challenged, they're doing the tasks they want to do with the people. that they want to do it with? Are they coming in on the right days? Don't have to be in 5 days a week, but are you coming on the days that matter? Where there's intentionality, when you have something to do, a reason to be in the office. Mentoring, for example, a brainstorming session that is better done in person. And when you're home, you're doing your heads down focused work.
Matt, you gonna help me build this incredible Bloomberg studio at my 2-bedroom apartment?
Yeah.
Okay. Cool.
We have budget for it? Let's do it.
Perfect. Let's do it. Hey, this is a great piece. I encourage everybody to check that out. It is today's a big take, a great one to read just right after Labor Day as well. Matt Boyle is a senior management and workplace reporter. You got to read everything that he and his team write.
Story.
It is a great story. He's, of course, with our colleague here at Bloomberg News. He's with us in the Bloomberg Interactive Brokers studio. In the meantime, let's get a check on the latest world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. We are waiting for the sentence for Enrico Tarrio. He is the Proud Boys leader convicted of seditious conspiracy in the attack on the U.S. Capitol January 6th. Prosecutors are seeking a sentence of 33 years, while Tarrio's attorneys are arguing for leniency since he wasn't even in Washington January 6th. The judge in the case, though, has applied a terrorism enhancement charge and says it was clear Tarrio was at the top of the command structure. The judge says the sentencing range is between 27 and 33 years. Still no sentence handed down. A 3-judge panel says if Alabama refuses to follow a Supreme Court ruling to redraw new, more racially balanced congressional districts, then it will. Bloomberg Law host June Grasso says the judges are deeply troubled Alabama lawmakers flouted their instructions to create a second majority black district.
Alabama is expected to appeal the decision to the Supreme Court. But remember, back in June, the Supreme Court upheld the panel's finding that Alabama's map had likely violated the Voting Rights Act. And here the state legislature was openly defying the court's order.
Again, Bloomberg Law host June Grasso. The United Auto Workers Union and Detroit's big 3 automakers are struggling to reach a new contract, but President Biden says he's not worried.
The union's 150,000 members are threatening a strike against General Motors, Ford Motor Company, and Stellantis. But President Biden said before a Labor Day speech in Philadelphia that he didn't think it would happen. There are significant differences between the two sides over pay and benefits and a transition to electric vehicles, and that's raised concerns about a potential work stoppage after the current contract expires on September 14th. In Washington, I'm Amy Morris, Bloomberg Radio.
President Biden is masking up after the First Lady tested positive for COVID-19. The White House says Biden will start wearing a mask indoors. Global news 24 hours a day. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow, S&P lower, NASDAQ, and the NASDAQ 100 index both higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks mixed in a choppy session. The Dow is currently down 120 points. S&P's dropped 9. Well, like you said, NASDAQ still trading higher, up 16. The U.S. 10-year yield at 4.26%. Gold is down 16. Oil is in the green. And Bitcoin, that's down by 0.5%. Among the main 11 S&P sectors, leaders were energy and tech. Materials and utilities were under pressure. And leaders to the upside in the Dow, Microsoft and UNH, while Walgreens and Dow Inc. led to the downside. In the tech space, Seagate dropped intraday after the company is seeing Q1 revenue and EPS at the low end of the range. In other news, homebuilders were under pressure, and United Airlines issued a nationwide ground stop due to a computer issue. Wrapping things up, some of the names pointing out to the bell tonight include GitLab and Zscaler. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
All right, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, it is that time for us to drive to the close. We are just shy of 18 minutes until the U.S. markets close here in New York. Very pleased to have back with us this afternoon Abe Deshpande, founder and chief investment officer at Centerstone Investors. Abe joining us on Zoom from New York City. Abe, how are you?
I'm doing well. Unfortunately, summer's over, but...
Is it, though? It's still so hot, and it doesn't seem like everyone's back to work. Does it? Is summer over?
No. It's COVID era, right?
Yeah, exactly. We've talked a lot about that this afternoon. Hey, we love talking to you because you always come with some great picks. We're going to get to those in just a minute, but first I want to start with macro because you're kind of in a different camp. You're not really talking about a soft landing. You argue that a mild recession could be coming.
Yeah, I mean, they're functionally similar, though. I mean, I'm not looking for like a huge 2008 or 9 or even 2020-ish decline in economic activity. But I mean, it's hard to argue that with the kinds of interest rate changes that we've had and the wild sort of spending spree that we were on, that there shouldn't be a period of retrenchment. I think there definitely will be. Seems to have already started. But whether that evolves into something. That's the end of the world. I just don't believe it. But I guess, as a famous person once said, the future is uncertain. So
what would be the catalyst to have growth slow down? I'm looking at the ECFC function in the terminal that obviously looks at the aggregate for economists, and they don't have a quarter-over-quarter contraction anymore for the remaining quarters this year.
So this is one of the issues is that when we talk about the economy, we're talking about in the United States, a $20 trillion behemoth. Economies are adaptable. They're dynamic organisms, right? So it's very rare for the entire economy to just implode. It's just too big. There are too many pieces and too many slices. So I think the nuance is parts of the economy can slow down enough to give the impression of from a macro standpoint, a slowdown that would qualify as a recession. That would be like a 0%, kind of growth rate. Where I have trouble, like most people, seeing a major problem is employment. Will that really turn it with all the shortages and labor, shortages we have? It's hard to see like a huge, labor problem. And then at the same time, you have a lot of stimulus, and a lot of that, $500 billion really hasn't gone through the system yet from the IRA. So, there's plenty of stimulus. There's, at least fiscal stimulus. The monetary stimulus has obviously been tightened, but anecdotally, many, if not most households refinanced at very low rates just a couple of years ago. I mean, there's not as much of a direct impact. Like if this was a 4 or 5 year economic cycle, I think interest rates would have much more of a kind of impact. But households are termed out. Where you can see the slowdown occurring is it's in the lower end, and we see this in the results from companies like Dollar General, which we recently began to purchase, where that consumer is hurting from the interest rate increases. But it's a smaller segment. It's a lot of people, obviously, but it's a smaller segment for the as a proportion of the total spend in the economy. But you can definitely see that there's slowdown here and there. I don't, and most people probably don't believe that there's going to be a direct hit to the entire economy. Those types of where the economy, quote unquote, like uniformly succumbs to weakness, that tends to be led by a financial issue, like a banking crisis like we had 15 years ago. It just I don't see.
What about a regional banking crisis?
I mean, had an issue for a brief moment of time in that region, but I was just talking to some mortgage brokers the other day. I mean, the banks are lending. The banks are lending freely, even to the distressed homeowners for doing home equity buyout lines of credit, for instance, to pay off higher interest car loans. I mean, people are getting by somehow.
Okay, Abe, I want to talk about some of the picks that you brought with you. I want to start with a company that I don't get to talk about much, but I'm a cyclist, and I saw Shimano on your list. And some people might know it as a fishing tackle company, some as a bicycle component manufacturer. Why is Shimano one of your picks?
So a lot of companies went through COVID and had a huge, biking became very popular during COVID because of an outdoor activity. And so that a big spike in demand, and now you're seeing the other side of that. A lot of businesses have too much inventory. Retailers have a lot of inventory, a lot of different things, and especially bikes. So there is a this issue kind of cycling through, quote unquote, the industry, and Shimano's not immune to that. Now that said, Shimano's one of really two brands in their space. They kind of more or less dominate the bike parts business. These are derailleurs, brake parts, and things that you see in a bicycle. And typically, people spec the bike with the parts, and the parts are actually more important than the bike in a lot of cases. So it's a branded good. It's a franchise, and where there's been technological development like electronic shifting and whatnot, Shimano's led that. So to me, it has all the hallmarks of a franchise. And in addition, which is somewhat still unusual for Japanese businesses, they're very shareholder oriented. They buy back stock, they pay a dividend, they understand what intrinsic value is for their own business. And as a consequence, we have a great deal of faith in management to be able to manage through this type of cycle. And since it's a franchise, we're more than willing to give them time.
We have about a minute left, but Ryanair and Porsche also on your list. What do you like about them?
Well, Ryanair, these are both, I'll take Ryanair first. Ryanair, like Shimano, is a brand. Now, unlike Shimano, Ryanair has developed their brand by being the lowest cost provider in basically the commodity industry, which is airlines. And they've done that by locking in gates and routes to airports that are they're outside the city center. And they've done that and have been able to provide the lowest cost airline ticket for European travelers. That's a business that, because of the cost advantages that they have, seems to gain market share every time there's a weakness. And then when things rebound, they have emerged with greater number of gates and their routes expand as a result. So they just continue to gain market share. As much as you can be a franchise in the airline industry, they've got it. And it's very unlikely that anyone can displace them. So that's the primary reasons. And again, good management, good business model, and the balance sheet's very solid too. They own all the airplanes too, which gives me some comfort. They're not sitting there leasing
Abe, we love it when you join us. That's Abe Deshpande joining us from Centerstone Investors. He's the founder and CIO at the company, joining us on Zoom from New York City. Just about 10 minutes away from the market close right here on Bloomberg Business Week. This is Bloomberg Radio.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Volkswagen's Auto Europa plant in Portugal says it will suspend production due to the lack of an essential part from a Slovenian supplier affected by floods in August. That component is needed to build engines. China is reportedly seeking to raise a $40 billion fund to bankroll investments in domestic chip making and research. This according to Reuters, which cites sources known as the Big Fund. Locally, the firm is one of the main vehicles behind Beijing's ambitions to build a self-sufficient chip sector that can reduce the country's reliance on American technology. It does come amid questions about Apple's supply chain in China amid trade tensions with the U.S. Alex Webb is a Bloomberg opinion columnist.
China, it is a symbiotic relationship that Apple has with China. It is not really in China's interest to somehow kneecap Apple because it employs upwards of 1 million people in China, right? So China needs Apple, Apple needs China. The likelihood of that breaking anytime soon seems minimal. Apple devices are still hugely popular in China because they've been building this ecosystem for a lot longer. So is it going to hurt them around the fringes? Maybe. Is it going to destroy their business there locally? It would seem highly unlikely.
And you can hear more of that conversation with Alex Webb on the Surveillance podcast. You can download it wherever you get your podcasts. Meantime, Apple shares, they are advancing today, part of a broader technology advance. We've got Apple up by less than 0.1%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. We're just about 5 minutes away from the close of U.S. equity trading here in New York. Tim Stenevec along with Jess Menton filling in for Carol this week. Jess, a couple stories that I wanted to get to before we get over to our TV team for our Beyond the Bell time. This was really interesting. A couple of redheads, that's, Bloomberg parlance for red sticky, breaking news, a big deal.
Gets your attention.
It gets your attention. And for me, it's all about airlines because, I love talking about airlines. United Airlines shares falling as much as 4.7%. This after the carrier suffered a temporary grounding of its aircraft nationwide due to an equipment outage.
Right. And if you look at that stock now, ticker symbol UAL down about 2.5%. So coming off a little bit of the lows there, but still lower. So even though it paired some of those losses, obviously you're seeing that stock under pressure on this latest news. And obviously a big thing, especially if you're thinking about traveling and what's happening. I mean, I've traveled with United many times, and depending on the particular hubs here, I know that's a big airline, especially when you're thinking about Newark and people flying out over there. So obviously causing some issues.
My mother and father-in-law just before this news crossed, sent a selfie from the airport
saying,
really? Ready to board our plane. And I texted back, I said, I hope you're not flying United.
Right.
Fortunately, they're not in there. They're
okay,
in the
that's
air
good.
on the way home. Hey, in the meantime, we're still seeing positive COVID diagnoses. We talked to Matt Boyle a little earlier. We use the terminology that we're past the pandemic and we're returned to normalcy, but we know things are not totally back to normal. I mean, we know a lot of people are still getting COVID. That includes First Lady Jill Biden.
Unfortunately, Jill Biden testing positive for COVID-19. And so obviously when you're thinking about President Joe Biden and those plans to travel to the G20 summit in India, just coming days before his expected departure. So kind of complicated situation there. Yeah, the White House announcing the First Lady's result late Monday and said she was experiencing only mild symptoms. The president himself was tested Monday evening and found to be negative. Here's what Karine Jean-Pierre said, quote, "The president will test at a regular cadence this week and monitor for symptoms." The press secretary providing no further details on how regularly Biden would be tested ahead of that summit that just mentioned. It's slated to start on September 9th in New Delhi. So we do know he does have a very busy schedule coming up. So kind of a reminder here that even though we do feel at times that we've gotten past COVID, still very much something that is going on and something that we have to deal with still. Yeah, he's not just going to be in India, but also in Alaska on September 11th to mark the 22nd anniversary of 9/11. Hey, coming up, we're going to be joined by our Bloomberg TV team for our cross-platform coverage Beyond the Bell. It starts now.
You're listening to Bloomberg Business Week. It's now time for Wall Street Daily. David Weston speaks to the top names in finance and economics, taking on the week's biggest issues on Wall Street.
Alongside Scarlett Fu, We're counting it down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with our friends Tim Stenovic and Jess Menton filling in for Carol Masser. Welcome to our Bloomberg audiences across our television, radio, and originals platforms. Interesting day here in the market. Tim, we talk about basically everything in the red right now. The NASDAQ 100 holding on to about 1/10% gain.
Is it?
Yes.
Wow.
Tim, I just said that.
Okay. Well, I mean, I'm showing a little bit of a decline. I guess I gotta refresh my screen.
You have to get one of those Bloomberg terminals.
I do. I mean, energy is one solid outperformer on the day today. On a day where we see WTI and Brent crude just move higher on the day, so we do see a little bit of green there.
We do, and then also technology up about 0.4% in the S&P 500. I know we are obviously in the month of September, and everyone likes to talk about the seasonality weakness, but not necessarily. Bank of America was actually talking about how when you see a strong first half in the S&P 500 up about 15%, that doesn't always necessarily bode poorly for the month of September. So obviously we still have a whole roughly month to go, so we'll see how that shapes out.
It all comes down to yields, doesn't it, and how things shake out there. With the 2-year now approaching 5% once again, this is something that people are going to focus on as they figure out how to value stocks moving forward.
Yeah, absolutely. And to Jess's point, too, there was another note out by the folks over at HSBC, and I thought it was interesting because they were saying that when you really go back and look historically here, look at that sort of stock market almanac here, a lot of those September losses that you saw were actually driven more by fundamentals, driven more by events rather than that seasonality and cyclicality that I think a lot of people think might actually repeat itself. Of course, here we are, and I guess, what is it, only the second trading day of September, so
it's early.
We got quite a few before we'll find out who's right and who's wrong, but nevertheless, we're going to have a lot of fun along the way. Dow Jones Industrial Average not having much fun on a daily basis, down about 0.6%, or roughly 196 points. The S&P lower by about 19 points, or 0.4%. We were talking a little bit earlier how even with Tesla rallying 4 or 5% on the day, that's not enough. More than 400 stocks lower on the day in the S&P. The NASDAQ down 11 points, or about 0.1%. And the Russell 2000, that's your big decliner on a percent basis, down more than 2%.
Yeah, continuing to peel back those layers remain. On the S&P 500, you had 88 stocks move higher, 414 moved lower today. On the Dow, 8 only advanced, Scarlet, 22 moved lower.
Yeah, and let's take a look at how the industry groups have fared for the day. 24 groups, and you can see only a handful of sectors in the green. Autos and components, that's Tesla there, up by 3.8% as a group. Software and services up almost 1%. And we should mention, of course, energy. Tim, you talked about energy being a bright spot in the market. The group had gained as much as 1.6%, so this is a far cry from the advances earlier. On the flip side, you have home builders leading down the consumer durables, transportation losing ground by about 2.3%. Those are the airline companies, and materials off by 1.8%.
All right, let's get to some of the gainers. I don't know if I've ever done gainers before, guys, but you know
Get
what?
excited.
I thought with Carol gone,
why not?
I can do whatever I want, and I'm going to do the stocks that moved higher today. Scar, you hit the nail on the head talking Tesla. Certainly at the top of the S&P 500 on a points and percentage basis, up 4.7%. This after the company reported yesterday, I should know, that China deliveries surged last month. Tesla delivering 84,159 vehicles from its Shanghai plant in August, 31% jump from July, 9.3% increase from a year earlier. Tesla, remember, also cutting prices and rolling out its long-anticipated revamped Model 3. And then oil and oil-producing stocks higher today. Occidental Petroleum, to name one, 2.5% to the upside. This is WTI and Brent moved higher. Energy, among the best performers, I should say, in the S&P 500. And then Airbnb. This is a fun one. Along with Blackstone, replacing Lincoln National Corp and Newell Brands in the S&P 500. We learned late last week that would happen. This is the first trading day since.
Yeah.
And investors certainly like that. You know, you get to those passive flows. So up 7% for Airbnb.
I'm curious, Tim, in 20 years, which one of those stocks is still going to be in the S&P, Blackstone or Airbnb? Or both?
Well, I have no idea.
I wanted you to go.
I would say, I'll say this. I think both will still be in it.
Okay.
There you go. What do you think?
I don't know.
Yeah.
I'm punting.
Okay. Well, hey, here's the deal. I'll see you here in 20 years. Okay.
Maybe.
I love
and
that.
We will figure out who won, who was right, and it'll be fine.
Okay, Tim, you're more optimistic than I am.
I'll go ahead. I'll grab the losers, the decliners for Tim, since he did the gainers today. But taking a look at, of course, United Airlines, have to point that out. So the stock closing down about 2.5%, its worst drop since August 9th. So obviously it did pair some of those losses on news that it's nationwide. Ground stop had been canceled, so we did see that stock down more than 4% in afternoon trading. Of course, I have to turn to Manchester United, down 18% at the close. So this is its biggest drop percentage drop on record. So that did come after a report that the Glazer family is going to take the club off the market after failing to receive offers that matched their asking price. And then Pulte Group down more than 5%. So this is in the home builder space. It's its worst drop since October of 2022. It's among the biggest decliners in the S&P 500 today, and a lot of those shares in the home building space getting pressured by a rise in yields there, Romaine.
Well, let's talk about those yields here because you talk about the start of the session about 8 p.m. New York time last night, and yields spiked higher pretty much across the board, and they stayed elevated all through the session here into the close. 494 and change right now on a 2-year yield, higher by about 7 basis points, and you saw similar moves of roughly 7 to 8 basis points across the key parts of the curve, including the 10-year, 20-year, and 30-year. Now, some of this, some people are saying, is tied to this deluge of issuance. We were learning that at least as many 16 investment-grade issuers might be coming to market this week alone, and what is traditionally here been a relatively busy week for new issuance, that first sort of few trading days coming out of the Labor Day holiday here in the U.S. That could put some more upward pressure on yields as we go forward. But of course, all told, this still circles back to economic conditions, and economic conditions that, if you believe some of our guests, guys, might be in that Goldilocks mode.
Well, for now, everyone's waiting for the Fed to do nothing in September and then look at all the data before they decide to move forward. So you mentioned all the corporate bond issuance, like, let's do it while the window's open.
I wasn't here for Jackson Hole. Did they do something then?
They talked a lot.
Okay.
You weren't there? You were on vacation?
No, I was stuck in the mud at Burning Man. But Jackson
You'd still be there.
I'm glad you made it out of there, Romaine.
Yeah, it was crazy.
Hey, we just chatted with Abhay Deshpande over at Centerstone. He's the CIO over there, founder. And it's an interesting commentary about likelihood of a recession. He still considers, he's in the soft landing camp, even though he thinks there's going to be a mild recession. He did warn of weakness, especially at the sort of the lower end of the economic spectrum. He pointed to recent issues with Dollar General, for example, and what they've said about their own consumers and what they said about their most recent quarter. But he's pretty optimistic, big picture, Romaine.
Yeah, and I mean, and we were going through a little bit earlier here on the television program some of the expectations for a recession. The idea that Jan Atzias and the team at Goldman had that note basically saying, well, only 15% case. But even like some of the more, I guess, aggressive calls for a recession have come down pretty significantly. We're talking now 50 to 60% probabilities compared to what earlier this year was almost near certain probabilities that people were pricing in.
I think another big thing, because we were talking about yields dictating the trajectory, especially when it comes to the stock market, but also the dollar. If you look at the DXY, it's trading around 104. That 103 level has been really key. But right now, if you look at the RSI, it's right under 70, which would be that sort of overbought level. So that's another thing I'm going to keep an eye on in addition to yields as far as how that impacts stocks.
And of course, we've got a lot of Fed speak coming out today, coming out for the rest of the week. Then they go into their quiet period starting Saturday, where we don't hear anything for the next 1.5 weeks almost. That's a long time to go without Fed speak.
Well, I mean, for some of us, we're kind of relieved that we can go that long without
What are we going to
Fed
talk
speak.
about?
I mean, Jim Bullard tomorrow, Romaine, even though he's not at the Fed anymore, but he'll be speaking in the morning.
What does this bicycle have to say? Just real quickly, guys, we do have some things to talk about. There are actually earnings, believe it or not. Earnings never sleep here. I just go through one Zscaler, of course, the big cybersecurity company. Those shares up about 4.5% here in after hours trading here on what looks like a pretty solid beat across the board. And more importantly, a fiscal 2024 forecast that it's giving coming in above expectations on an adjusted EPS basis for the full year, 220 to 225 a share. The street on average was looking for 209, and even on the revenue side, 472 to 474. The average of street estimates was below the lower end of that range, guys.
I go to the press release to get some color. The company's founder, chairman, I should say, and CEO, Jay Chaudhry, saying, quote, "We concluded our fiscal year with strong top-line growth, record operating profits. In less than 2 years, we doubled our annual recurring revenue, surpassing the $2 billion milestone. With cybersecurity as a high priority, IT executives are modernizing their legacy network security with our zero trust architecture."
We also have earnings from GitLab. Have you heard of GitLab before, Romaine?
I have.
It's an application software company, and that stock also moving higher in after-hours trading by almost 7% after it boosted its full-year revenue forecast, and it beat analyst estimates for the quarter that ended. Revenue of $137 million, if you round it up, is better than the $129 million that analysts were anticipating.
And when you're looking at both of these companies, Tim and I actually coming up have Dana Simberkoff, who's actually over at AvePoint, who's going to talk to us about cybersecurity and why it might not necessarily be ready for the AI boom. So it's interesting when you're having these two companies report back to back after the closing bell today.
You like the deep tease that Jess Menton did?
I did. Her voice even crackled as she was reading that.
I know. We're gonna get her a cup of water in the break. In the meantime,
do they not have tea over in the radio studio? There?
Apparently not.
No, we have to get our own stuff, Romaine. We have to the
struggle is
real.
real.
The struggle is real. Well, it's not a struggle to spend time with you guys, but unfortunately, we have to go. We are going to see you tomorrow, same time, same place. That does it for our Beyond the Bell coverage. It's our cross-platform coverage of the market close on Bloomberg TV and radio, Bloomberg Originals, and on YouTube. Catch us, though, same time, same place, tomorrow.
You're listening to Bloomberg Business Week. It's now time for Wall Street Daily. David Weston speaks to the top names in finance and economics, taking on the week's biggest issues on Wall Street.
Well, you hear that music and you know exactly what it means. It means it's time for Wall Street Week. Well, it's not Friday yet, David Weston, but we still got David Weston with us this afternoon because he's got a very special interview coming up that, David, you've already done.
I did this morning, yeah.
You did it this morning. Yep. You're already thinking about Friday? Is that what's going on here?
Yeah.
I feel like with your job every day you have to be thinking about Friday.
I'm not as quick-witted as you are, Tim. I actually think a couple days ahead to try to plan these things. But yeah, Larry Culp is the CEO of GE, and it's always a treat to sit down with him. But believe it or not, it's been 5 years since he took over. And if we think back to those days, they were some pretty dark days for General Electric, and an awful lot has happened in those 5 years. Among other things, he's paid down $70 billion in debt, believe it or not, and actually increased the market cap, and is spun off healthcare, is about to spin off power as well. And one of the things I asked him about was, how do you manage that? How do you manage the egos of the board and the employees, and even his own ego, saying, we're never going to be the largest company in the world again? And this is what he had to say.
I've long believed that you're far better off being strong rather than just big. And that was a little bit of the evolution of our conversation. We're not going to be an all-singing, all-dancing GE going forward. But that doesn't mean we can't lead the energy transition. That doesn't mean we can't be a leader in precision healthcare. That doesn't mean we can't define the future of flight. And that's what these three businesses can do. Now, they'll do them on their own. We'll share our history. We'll share our brand. We'll hopefully share some of the operating characteristics that we've been talking about. But on a go-forward basis, I don't think there was a lot of ego involved. I think the board knew that our duty was to set the businesses up for success, to serve the teams, to serve the customers in that way. I think for some, when we were going through the deliberations, it was tough to think about a different construct than the one they had joined. But as we looked forward, and throughout that process, David, everyone was looking forward. I think there was easy consensus that each of these three businesses on their own bottoms were going to be industry leaders. The alignment from the boardroom through management to investors was going to be additive to the cause. So when we went around the table, it was an easy vote.
So listening to that sounds perfectly obvious and natural. I'm not sure every CEO in America would have the same clear-headed view of it, because a lot of CEOs do care about how big their company is. It's understandable they do. But you have to understand, for example, he more than doubled the market cap of that collective company,
right,
while he was getting rid of operations at the same time and really paying down debt. That's not an easy thing to do.
And in 2018 was when GE was kicked out of the Dow. If you look at where its stock's trading at, close to the highest level since late 2017, early 2018.
It's been on a tear.
It has been kind of under the surface here, this sort of recovery that's been happening. What do you think have been sort of the main catalysts and drivers?
Well, he would say he focused clearly, and his team, because he'd be quick to say it's the team, focused on the balance sheet and focused on the over-leveraging and getting leverage down. And had to make some tough decisions about what they could sell to get the leverage down, so they had some flexibility. And then he said the team basically was a good team that he inherited, made some changes, but really a good team. But it needed focus, and it needed drive, and it needed metrics, and it needed to believe in what needed to be done operationally. And we have to remember, Jess, it's fascinating, I hadn't really focused on this. Besides the problems of General Electric, within a month after he took over, it was the 737 MAX problem, which hit so hard. Then you had a pandemic, you had supply chain problems, and oh, by the way, a war in Ukraine. So beyond the internal problems within GE, look at the things that they've had to confront. It's really quite extraordinary.
Yeah, you pretty much summed up perfectly the last 5 years of really what happened, David. When you think about the three different business sectors that Larry Culp just mentioned, energy transition, precision healthcare, and then future of flight, Two of those are ones that we talk about here on Bloomberg Business Week all the time. Energy transition, incredibly important. What companies are doing to try to move us away from fossil fuels. And then, of course, what's happening with healthcare. What would you say that Larry Culp, and I don't want to give the whole interview away for Friday, but where is he most bullish?
I have no secrets for you, Tim.
Thank you. Well, in that case.
But first of all, let's be clear. He's already made it clear he's going to stay with aerospace.
Yeah.
Although he is a non-executive chairman of healthcare. He believes in all of them, and he certainly thinks that aerospace is really hitting on all cylinders, doing great things as it can grow enormously. He actually thinks the precision healthcare may be the thing that may have the most potential. He's very enthusiastic about the potential there. He thinks there's a lot of things that can be done.
So what's next for GE?
Well, they're going to be 3 companies, and they're going to have more flexibility than they've had in the past to expand in individual ways. As you heard him say, he'd like to believe that they'll retain some of the operating principles that he imbued in, but they're all going to grow in different ways and be free to focus on what they're doing. I also asked him what's next for Larry Culp. Has he basically accomplished what he wanted to do? He said for now he's very happy to run this company. He basically said it's been since the 90s when he ran Danaher that he could focus on one business. And he's actually looking forward to focusing on one business again like he did back in the 90s.
Would you say, David, that the legacy of Jack Welch is still within GE?
Boy, that's a very good question. I don't know. I did know Jack Welch, and I knew GE some. I would say, and this is a superficial reaction from the outside, I'm not sure how much is left. Now, obviously, a lot of the people are, but I'm not sure you hear as much about Six Sigma, and you don't hear quite as much about, their development of talent. And by the way, it strikes me as ironic that one of the things Jack Welch was so proud of is we're only going to develop an in-house. All of our potential successors are all going to be GE people. Not so with Larry Culp. He was from Danaher.
Wow.
He'd been on the board like 6 months before. And he's not from GE. He's from Danaher.
But then you had a lot of GE people go off and run other companies as well over the last 2 decades.
Yeah, well, look at Dave Cote, for example. Yeah. Dave Cote was one of the ones coming up under Jack Welch who wasn't going to get the top job. And then look at what he did with Honeywell. I mean, one of the great CEOs, I think, of his generation.
So aerospace rebound, is that what GE is foreseeing?
Well, sure. They think they can really grow that business a lot. Now, interestingly, I asked him, how big is the business going to get? Why don't you want to acquire some things? I mean, they really are leading in engines, particularly with their joint venture. But I said, well, what about vertical integration? What about adjuncts? And he said, look, we'll take a look at small, might even take a look at a medium. He volunteered, not necessarily the headline grabbing one. And I said, well, why not? And he said, look, I think we need to prove to ourselves and our shareholders on our board that we can walk before we start running. And so this is not the time to start doing big deals. Let's do some small deals and show we can do them.
What do you think shareholders want to see the most at this point?
Performance. I mean, don't they all? Always.
I mean, they're getting it this year.
And they are getting it. That's exactly right. I mean, I would assume that they're fairly content with what they're seeing so far. But it's execution. It's the blocking and tackling. It's not necessarily the fancy stuff.
Did we leave anything out, David, or did we?
I don't think so. I think you got it all. So.
We did.
Yeah,
but there's still a reason. But there's still a reason to tune into Wall Street Week this week.
I just think seeing the way this, I think, really excellent CEO thinks and the approach he took to what was thought to be a near impossible task. I mean, there are people thinking it would not survive. It would really not survive as a company, and to take that iconic company and just reverse engineer it, redo it, and to see how he set his priorities, what he focused on, what he left beside, what he did with culture, how he chose talent. I think it's, for me at least, it's a primer on what you can do as a CEO.
It is pretty remarkable. We were talking on our planning call about this, and GE was the blue chip of blue chips. I mean, this was the company that, if you had a baby, people bought you stock in the company.
It was almost $600 billion in market cap at one point. Yeah, now, combined with the healthcare, it's 125 plus about 40, so it's about 165 now. It was like 66 or so when he took over, but it was $600 billion.
It's incredible.
Yeah.
All right, David Weston of Wall Street Week. David, always great to see you. Be sure to tune into Wall Street Week. You can hear more from that interview. It's this Friday, Bloomberg Wall Street Week with David Weston, 6 p.m. Wall Street time, of course, on Bloomberg Radio. Hey, we do have some headlines crossing right now. Enbridge to buy Dominion Energy Utilities for a total of $14 billion. That redhead gross crossing moments ago. And in case you're just joining us, taking a look at how the markets closed on this first day of the lightened trading week, I should say, the shortened trading week. The S&P 500 down 0.4%. The Dow down 0.5 percentage point. The NASDAQ composite down just about 0.1%. We are just getting started. Much more Bloomberg Business Week coming up in just a few minutes, and this is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Word of a major utility deal after hours. Pipeline operator Enbridge is buying 3 natural gas utilities from Dominion Energy. The price tag on this transaction, $14 billion. The deal will create North America's largest natural gas utility platform. Again, we've got Enbridge, based in Calgary, Canada, pipeline operator. It is buying 3 natural gas utilities from Dominion Energy for $14 billion. Earnings after the bell, the security software company Zscaler has forecast adjusted EPS for 2024, and that guidance did beat the average analyst estimate. After hours, we're looking at shares of Zscaler up now by just about 4.5%. Turned out to be a down day, a down Tuesday for the Dow, the S&P, and NASDAQ. S&P 500 index ended the day lower by 19 points, down by about 0.4%. The Dow dropped 195 points, down 0.6%. NASDAQ, the composite index, was down just about 11 points, down 0.1%. But the NASDAQ 100 index, full of big tech names, did hold on to a gain of 0.1%. 10-year yield, 4.26%. The 2-year, 4.95%. Spot gold down $17 the ounce to $19.25, a drop there of 0.1%. And West Texas Intermediate crude up 1.3%, $86.69 a barrel on WTI. Again, repeating our top story right now, Enbridge buying 3 Dominion utilities for $14 billion. I'm Charlie Pellett. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Minton and Tim Stenovic here.
Hey, I'll take it, Jess. I'll take it.
Filling in
I've
for
been called
Carol
worse,
Vassar,
okay?
but Tim, not STEM, Tim Stenovic here at the Bloomberg Interactive Broker Studio. And Tim, we all know how much AI is all the hype.
I mean, just look no further than
things,
NVIDIA's
right?
year-to-date increase of 200% or more.
Exactly. Though questions do remain about what this all means for cybersecurity, particularly in the workplace, especially since generative AI applications continue to evolve. So we have Dana Simberkoff, Chief Risk, Privacy, and Information Security Officer at AvePoint, joining us on Zoom from New Hampshire to explain why the cybersecurity industry isn't ready for the AI boom and what guardrails companies should use to protect their employees. Dana, thanks so much for joining us as always. I want to get your thoughts on that because when we are discussing, like Tim and myself, about this AI boom, why is it that cybersecurity companies may not be ready for this just yet?
Well, thanks, Jess and Tim, for having me this afternoon. Great to be with you. I think AI is just yet another obstacle in the road to looking for that perfect security solution that just doesn't exist out there, honestly. So artificial intelligence and sort of the deep learning that is coming through technologies like ChatGPT really puts cyber professionals on edge because this is just one more ripple in the world we live in where cyber professionals have to be right 100% of the time. And bad guys only have to be right once in order to get inside of your defenses. So,
and there's no shortage of bad guys out there, Dana, as we certainly know. So what's the worst case scenario here? I mean, describe for us what kind of keeps you up at night. What makes you scared?
Well, I think that really the secret to building a good program and addressing this is really to go back to cyber hygiene basics, doing what we do every day, which is making sure that we have good data governance in place within our companies and across our partner ecosystems. Because if you know what information you're handling, if you know what it is, where it is, who can access it, and how it's being shared, then you can largely mitigate some of the risks that are associated with AI. So at the end of the day, it does. Oh, I'm sorry.
Oh, no, continue.
No, I was just going to say at the end of the day, it does come down to people, policy, and technology. So there really is no bad technology, just bad use of technology.
And when you're talking about cybersecurity, are there particular sub-industries or companies that you think might potentially be more vulnerable than others?
Well, I certainly think that the ability for, again, those malicious bad actors to use AI to potentially perpetrate cybercrime, take advantage of insiders inside of a company, to really accelerate the process of cyber attacks we've already seen through phishing and smishing, where somebody receives a phone call or a text message saying that they are an executive that need help right away. Just imagine that amplified with the ability to actually, fake a person over video, these deep fakes that we've been hearing about, where the person's image or voice could be easily replicated.
Dana, you said phishing. We all know about phishing. Did you say smishing?
Smishing, yes. Smishing is using a text message or some kind of social media. So whether it's WhatsApp, or your phone, or just pretending to be somebody that you're not, and using technology to get to an intended target. And this is really common. We see it a lot, both inside of our company as as we build our own cyber defenses, but also across our customer ecosystem, where it really isn't just what you know, but who you are. That makes you a target potentially within a company.
Yeah, I didn't know that's what it was called. We had a great cover story, an excerpt from Zeke Fox's forthcoming book, Number Go Up, that talked all about where those text messages actually come from. So I encourage everybody listening who's interested to go check that one out. It was just a couple of weeks ago. Okay, so Dana, what about when it comes to, I mean, when I think about the worst case scenario, I mean, I understand, like I consider myself pretty savvy when it comes to not answering those phishing emails, and we certainly get trained pretty well here at Bloomberg, and I think a lot of companies do that in this day and age.
They send us some trick emails at times just to see if we get caught.
Yeah, they do. You got to be vigilant. I think my concern though is how generative AI sort of changes that, and it makes it so it's like really not possible to distinguish what is real and what isn't real. So let's say that the weakest link is always the person. Where do companies like AvePoint come in to try to stop that from happening?
Well, I think at the end of the day, it really is going to come down to not only identity, but also technology and what we allow individuals to do. So just in the same way we've been talking over the last really couple of years with COVID about now the borderless office, where employees are working really from anywhere in the world, their home, Starbucks, the office. That means that there's no perimeter around the office that you can protect. And so identity really has become that new perimeter to a great extent. And making sure that you know who you're talking to and who you are is going to be critical. And limiting the ability for somebody to move either horizontally or vertically within a company if they are impersonated is going to really help sort of fill that gap and protect against that kind of risk.
We actually did hear from Zscaler after the bell. They did report earnings, and their forecast for EPS did beat estimates. But of course, when it comes to a cloud cybersecurity company like this, and I have to note it stocks up more than 5% in after-hours trading, how does cloud play into this, and when it comes to AI as well, and some of your concerns?
Well, cloud is both an opportunity and a risk, but certainly AvePoint as a cloud-first company providing services to millions of our customers around the world takes advantage of a lot of the built-in security controls that exist through our partners like Microsoft and others. There's also real opportunity with AI in the cloud to benefit from, the kind of machine learning and intelligence that could also be used to fight cybercrime. So I think there are tremendous opportunities that the cloud brings, but really at the end of the day, it's somebody else's computer. And so that good data hygiene, data governance is going to be critical to making sure that whether you're in the cloud or on-premise, that you're really doing the right things to protect your business and your data.
Is there a future for on-premise, or is it all in the cloud?
Well, hard to say. I think, the cloud is certainly the future. It's the wave, it's the direction that we see companies moving more and more. I think that there will likely always be some hybrid environments, and depending on your industry, depending on the kind of information you have, cloud is not always possible, but we'll see. We never say never, and I think it's always good to hedge your bets.
Whenever you speak to companies, what is their biggest concern right now?
Well, again, I think it is knowing where that data is. It's that unknown, that risk of not knowing is never better. And so, the challenge for AI is clearly that you can have a machine outpacing you rapidly. We now see that our computers regularly are asking us to prove that we're human by answering things like CAPTCHAs when you go to websites. Will computers outpace humans? At some point, maybe. I think, again, for cybersecurity and privacy professionals, it's building accountability into the way that we use data, making sure that there's good transparency with our customers, and making sure that we're really, doing the right thing to maximize the opportunity for businesses to do what they should be doing while protecting the rights of individuals and data subjects.
I don't know, Jess, do you ever have a problem with those CAPTCHAs? I feel like the CAPTCHAs have already outsmarted me. I mean, you know what I'm talking about, right? Those things, those little tests.
They can be tough.
Yeah. I mean, come on.
I honestly, one time I got one of those Bloomberg emails and accidentally clicked on something. Then I had to go back through and do all of the training. So I'm super vigilant now and not doing that.
You're busted. You only make that mistake once.
I know, exactly. So never again after doing that.
Well, that's good. That's good fiber training.
It really really is.
Yeah, we have some pretty, and it takes a while to do those trainings too. So
Exactly. So
can't
you'll
save
never
it for the
forget.
last day, Dana. I'll tell you that. Dana Simberkoff, really appreciate you taking the time. She's Chief Risk, Privacy, and Information Security Officer at AvePoint, joining us on Zoom from New Hampshire this afternoon. I think there's a lot of questions about what the future of sort of the hybrid cloud is, Jess, and
Yes.
whether or not what's on premise and what's not on premise, especially with the multinational companies where those servers are based. You see that certainly with tech companies that
Right.
are required to co-locate servers in certain countries, and then those servers and that information is under the jurisdiction of that area, so it gets really complicated.
Definitely does, and just how much AI can change the world, but obviously those cybersecurity issues. But let's get a check on the latest world and national news with Nancy Lyons in Washington, D.C.
Thanks, Jess. Lawmakers are returning to Capitol Hill with plenty on their to-do list. Mick Mulvaney, who once ran the Office of Management and Budget that handles any government shutdown, tells Bloomberg lawmakers must approve a spending bill.
There's only one bill every single year that really matters as a fiscal conservatives, and that's the spending bill. That's it. That's the only one that counts. You can do all the deals you want to on debt ceilings. You can have, sequesters like we did back in 2011, 2013. It all counts for crap. It doesn't count for anything. The only thing that counts is the annual spending bill, the appropriation bill.
Without a spending bill, the government will shut down at midnight September 30th. Mulvaney spoke with Bloomberg Sound On. You can hear the full interview wherever you find your podcasts. President Biden is planning to travel to the G20 summit in India this week, but his travel plans could be complicated if he catches COVID-19 from the First Lady. Joe Biden tested positive for the virus last night. White House Press Secretary Karine Jean-Pierre says the president is taking precautions.
Since the president was with the First Lady yesterday, he will be masking while indoors and around people.
Jean-Pierre says the president will test at a regular cadence this week, and they will monitor for symptoms. His latest test was negative. Still no sentence for Enrique Tarrio, the leader of the Proud Boys, who has already been convicted of seditious conspiracy for the attack on the U.S. Capitol. During today's long sentencing hearing, Tarrio's attorneys have requested leniency, citing his work with Toys for Tots. But the judge has already pointed out Tarrio was the top of the command chain during the Capitol attack, even if he was not on the scene. So far, the longest sentence for the January 6th attack has been 18 years. The judge says the guidelines suggest 27 to 33. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg, and a developing after-hours acquisition. Pipeline operator Enbridge is buying 3 natural gas utilities from Dominion Energy for $9.4 billion. That deal will create North America's largest natural gas utility platform. After ours, we do have shares of Enbridge, though, tumbling by 7.5%. Global debt markets are bursting with new deals as September kicks off, with investment-grade companies rushing to lock in borrowing costs before central bankers can raise them further. At least 40 businesses are tapping high-grade bond markets around the world today ahead of crucial releases of economic data and central bank policy decisions later in the month. Stocks did move lower today. We had the S&P 500 index falling by 190, down 19 points today. That was a drop of 0.4%. Dow Industrials down 195, a decline there of 0.6%. NASDAQ lower by 11, a drop there of 0.1%. The NASDAQ 100 index up today by 17 points, a gain there of 0.1%. 10-year yield, 4.26%, with a 2-year yielding 4.95%. Spot gold today, $19.25 the ounce, down by about 0.9%. Brent crude, $90.05 a barrel, up today by 1.2%. West Texas Intermediate crude, $86.74 a barrel, up by 1.4%. So a down day for the U.S. stock market. Abed Deshpande is Chief Investment Officer at Centerstone Investors. He was a guest right here on Bloomberg Business Week. He told us he does see a mild recession.
I'm not looking for like a huge 2008 or 9 or even 2020-ish decline in economic activity. But I mean, it's hard to argue that with the kinds of interest rate changes that we've had and the wild sort of spending spree that we were on, that there shouldn't be a period of retrenchment. I think there definitely will be. Seems to be already started.
And you can hear more of that conversation right here on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Minton and Tim Stenovic here in the Bloomberg Interactive Broker Studio. Tim, as you know, we discussed earlier in today's Big Take with Bloomberg's Matt Boyle, workers in Asia and Europe have largely returned to offices at a faster pace than their American counterparts more than 3 years after COVID shifted corporate life. Now, U.S. employers are demanding a workplace reset, and they want it now on everything from action on societal issues and work-life boundaries, per Edelman's latest Trust Barometer report. So who better to walk us through this latest report? Back with us again is Richard Edelman's Chief Executive Officer at the firm, who is joining us on Zoom in New York City to discuss these latest findings. Thanks so much, Richard, for chatting with us again. Walk us through what you think are the biggest takeaways from these latest figures that you have.
I think the first important finding is that my employer is substantially trusted more than any other institution. So trust is local in my CEO and in my company's ability to make change. 25 points higher than the other institutions, 60 points higher than government in terms of ethics. The second big finding is the trust gap for so-called deskless workers. In other words, people who are either on the factory floor or operating as sort of independent contractors. They have substantially less trust in institutions. The third big finding, which you led the broadcast with, is workers want a reset. 2/3 of people say, I want to change my work-life balance. This is a 3 years after COVID kind of reaction, saying, you know, I'm not so fast, folks.
Are they, Richard, still in control, though? I mean, yes, we're still adding over 100,000 jobs each month here in the United States, but we're not hearing from executives to the same extent that we were in the last couple of years, how much trouble they're having finding employees. Who's in the driver's seat?
So employees think that they are, because they're saying by 6 to 1, 7 to 1, I want my CEO to speak up on societal issues. I expect that, in fact, you're going to listen to me when I want to make change. I expect, in a sense, sort of a partnership as opposed to a classic employer-employee relationship. But this is being sorted out because the employer has the tightrope also of don't get into politics, and be careful on especially in the U.S. on steering clear of electoral politics or things that will get you into trouble.
When you're talking about work-life boundaries, what specifically are employees looking for?
Employees are looking for, in a sense, a new compact that says, you'll listen to me, you'll come visit me on the factory floor and get my input. In fact, the deskless worker who actually feels very disconnected is connected if the company trusts them. So that matter of going out and listening, but also we want to hear in the halls of power the voice of our CEO expressing our views.
Does this change based on the type of industry that the company's in? Like, if you're working for one company in one sector versus a company in another sector, is it different?
I think in tech and financial services, it's sort of the counter positions where financial companies are really ordering employees back. The CEOs of tech companies, because they have talents and are remote programmers, theoretically can work solo. But
Richard, what I mean in terms of trust.
But what we found in our own company, trust is made up of four things: ability, dependability, integrity, and purpose.
Okay.
And the ability to come together in the office, I think, gives some sense of culture and also some sense of shared purpose. So we're encouraging a hybrid structure, and several of our clients are following suit.
Tim and I have been discussing a lot this afternoon with this theme about, especially when we're talking about the U.S. and employers trying to get their employees back into the office. What do you think is the catalyst that changed that? Is that a potential? Because we don't see a recession on the horizon, but at a particular point in the business cycle, if you do see that shift with a slowing economy and then job cuts are coming, is that the shift that employers think could potentially shift the power there?
The power struggle is a standoff, and the smart company will find a way between and move gradually if that's the direction. But what employees really want is to feel as if they're getting value from their employer, that the employer's listening, that it's not going to go back to the pre-2020 method of talk down to me. I want to be represented. I want to be heard. I want to feel as if I'm making change. By 8 to 1, people say, I'm prepared to come to work for a company if that company stands up on human rights or on sustainability or on race and diversity. So that matters.
So when it comes to thinking about what the takeaways are for leaders who are listening to our program, who are watching our program right now, what have you learned in the years that you've been doing the Trust Barometer and how it's changed? Because I got to tell you, last couple of times we've had you on, it's been similar findings, Richard, that the company is the one where people trust as an institution more than government. So what's the big takeaway for executives listening?
My employer is so much more trusted than any other institution. There are huge expectations of you in satisfying what an employee wants from a societal point of view, work-life balance. It's complicated by the reality of politics in today's world. So I would identify the 3 or 4 key issues on which I'm going to speak, which have to do with your own values and your core competencies. And they're probably in the area of sustainability, diversity and inclusion, geopolitics when it matters, like getting out of Russia, and lastly, wages and reskilling. On the other issues, talk with your employees, talk internally, but be careful about what you say in a public sense as an advocate, because again, you'll get right into the R versus D, and the differences could not be more stark.
Yeah, that's certainly an area where, you don't want to bring that up when you're with new people you meet or in the workplace, right? Religion and politics, those are things.
Polarizing topics.
Richard Edelman, we love it when you join us, CEO of Edelman, joining us on Zoom from New York City. Some really interesting findings in this, and we have Richard join us. We have him join us several times a year. Often he joins us from Davos, where he is at the World Economic Forum, and talking to these leaders, Jess, who are making these decisions about the ways that they run their business. You're listening to Bloomberg Business Week. Jess Menton and Tim Stenovec. We're live in the Bloomberg Interactive Brokers studio in New York. This This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Wells Fargo bank analyst Mike Mayo says Citigroup's $41 share price reflects too much fear, and investors looking for a long-term opportunity, should buy the stock. Mayo says the Wall Street bank shares are trading at prices that imply its balance sheet could take a big hit from asset losses, but he says that seems unlikely given the current strength of the company's assets and its relatively high capital levels. Citigroup shares today down by 0.6%. Ørsted of Denmark says it is prepared to walk away from projects in America unless the White House guarantees more support. And with more on that story, here's Bloomberg's Tom Busby.
Charlie, it highlights the numerous challenges facing wind energy developers here in the U.S. The U.S. far behind Europe and China in the race to build offshore wind. While the Biden administration has touted its landmark clean energy subsidy program to kickstart projects, developers must ensure a large chunk of components are American-made. That's proving hard to achieve. The Danish firm has had a turbulent few months with supply chain glitches and soaring interest rates weighing on U.S. plans. It's also been a tough time for offshore wind globally, with costs for steel and other materials spiraling higher, just as countries around the world push to add more turbines. Charlie?
And that's Tom Busby reporting. And those are some of the top company stories that we have for you at this hour. I'm Charlie Pellet, and this is Bloomberg.
listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenivek and Jess Menton in for Carol Master this week. Let's get a check on the latest world and national news. For that, we go to Nancy Lyon. She's in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. The former leader of the far-right Proud Boys is being sentenced this afternoon for his role in planning the January 6th assault on the U.S. Capitol. Prosecutors are asking for the longest prison sentence yet for Enrique Tarrio, more than 3 decades behind bars. They claim he was trying to trigger a new American revolution. His attorneys are arguing he was not even there that day. Former Trump White House Chief of Staff Mark Meadows has pleaded not guilty to charges in the election interference case in Georgia. Meadows and 5 other co-defendants waived their rights to formal arraignments and pleaded not guilty today. They face racketeering charges for allegedly trying to overturn the state's 2020 election results. The White House is preparing for President Biden's planned trip to the G20 summit in India and also keeping an eye on another planned summit next week between Russia and North Korea. We get more from Bloomberg's Irv Chapman.
With the Ukraine war as a backdrop, National Security Advisor Jake Sullivan was asked about North Korean leader Kim Jong-un's announced plan to confer with Vladimir Putin.
We have not seen them actively supply large amounts of munitions or other military capacity to Russia for the war in Ukraine. We have continued to squeeze Russia's defense industrial base, and they are now going about looking to whatever source they can find.
At the meeting, Sullivan said the president will focus on helping developing economies with more World Bank money and debt reduction. In Washington, Irv Chapman, Bloomberg Radio.
Senate Minority Leader Mitch McConnell's office is trying to reassure the public after his latest health scare. The 81-year-old lawmaker's office released the results of a recent exam with the Capitol Hill attending physician. It states that McConnell does not have a seizure disorder and did not suffer a stroke. The doctor also said there's no evidence of a movement disorder like Parkinson's disease. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Tim and Jess.
Thank you so much, Nancy Lyons. Really do appreciate that update. So a couple of the most read stories on the Bloomberg terminal, Jess. This one you brought my attention to a little earlier. It's by our own Vildana Hyrick. And it's, we've talked about NVIDIA a lot, but some folks are saying that, we're seeing a little bit of a bubble territory
Right,
here.
so that's what he is calling. So this is the latest Tech Watch column that we have, and Vildana goes through this. So he's talking about basically...
So he is Rob Arnott, right?
Yes, correct. Talking about some of the dangers here, especially because we always hear this story, right, Tim, when it comes to valuations. I mean, if you're looking at NVIDIA, ticker symbol NVDA, it stocks up more than 230% year to date. Obviously, a lot of that being really driven by the AI hype. And there was a lot of pressure on this company in particular once it reported in recent weeks. It actually came out with results on August 23rd as far as could it deliver or